William Cohan. He's former Wall Street banker, founding partner at Puck, and author of Power Failure, The Rise and Fall of an American Icon.
So, William, at Puck, which is something I subscribe to and I like it very much, you wrote that you have, quote, tremendous empathy for what the victims of the Silicon Valley Bank disaster are feeling right now. Now, who are the victims? The Fed just came in and said that even a company like Circle, which apparently has $3 billion of its cash in assets in SVB, will get paid in full. Forget the $250,000 limit for the rest of us. Everybody gets made whole. So who are the victims? And who are the villains, would you say?
Well, Terry, that piece was written before the Fed and the Treasury and the FDIC joined together to say that they would support and take care of deposits greater than $250,000. So at one point yesterday afternoon, it looked like many portfolio companies of venture capital companies would not be able to make their payroll unless the venture capitalists stepped in and made that payroll, because that more than $250,000 was held in deposit at Silicon Valley Bank. So obviously, after the Fed and the Treasury and the FDIC made that ruling last night, the list of victims declined dramatically and restored confidence, I think, to the banking system. Obviously, we're still seeing the repercussions of the failure of Silicon Valley Bank in other regional banks. There's absolutely a flight to quality going on today, which you would expect. But I think once the market begins to understand what the Fed and the Treasury have agreed to do here, some of that concern will subside. But make no mistake, this is a major change in policy. As you said, underwriting deposits for everybody above $250,000. Who does that benefit? That benefits the wealthy among us, because not many people have more than $250,000 in their bank accounts.
You know, banking is clever, right? There's sort of this mirage of safety, as you talk about, and security, I guess, when we take risks like this.
Well, we think that when we directly deposit our paychecks into a bank or go to the bank teller and deposit a check, that it's safe and it's going to be there whenever we want it. But we're part of a fractional banking system, which means essentially that the money is not at the bank. The way banks make money is by taking our money, essentially their raw material, and lending it out to people who need it, corporations, universities, municipalities, you name it. And they make money on the spread between what they pay us for our deposits, which is pretty much close to zero these days, and for what they can get by lending it out to others. And so that system works great, but until everybody sort of wants their money at the same time, which is what happens in a quote unquote panic, which is what happened at Silicon Valley Bank, and which may or may not have begun to happen at Signature Bank. We don't know for sure, but certainly was happening at Silicon Valley Bank. And so at that point, people realize, oh my goodness, the money is not there because it's been lent out to other people for 5 or 7 or 10 years, and they have no obligation to return it. So our system is very, very fragile, and yet we think it's secure and safe. It's a bit of a confidence game. And again, when everybody is patient and isn't thinking they all need their money at the same time, the system works just fine. Otherwise, banks can't make money, and if banks can't make money, they won't exist.
Right, and it does sound like that scene in It's a Wonderful Life, where everybody's going to accelerated by social media, and there's no Jimmy Stewart to help us out in this instance. But I want to ask kind of the bigger question. So look, if every 10, 15 years there's a banking crisis that threatens the whole economy, and the American people in one form or another are asked to step in and rescue the financial system, doesn't it mean we're under-regulated? I mean, I don't want to take a position here, but if it seems like this is, it's been a hairy few days, right, with people worried about the whole system, doesn't that argue for more regulation?
I mean, I think it's a subset, a vocal subset of the American population had a rough weekend, but obviously most people don't do banking with Silicon Valley Bank. But look, I think the fact of the matter is, Terry, that every 20 years in this country, in our history, we've had a financial crisis. Our country was born of a financial crisis because of the Revolutionary War. So I think that financial crises are sort of the price we pay for our private banking system, our ability to get capital, our financial markets, which are the envy of the world. I think we've decided as a country that we're willing to put up with the occasional, once every 10, 15, 20 years financial disruption to have open markets, to have free markets, to have a wonderful capital market system where people pretty much can get capital if they qualify for it and can pay for it, for any number of reasons. But, our banking system is fragile. It is based on confidence. And, now with this decision by the FDIC and the Fed and the Treasury to backstop all deposits, I mean, the real question is, has the government become the bank? To some extent it has. And after the last financial crisis, where, of course, Bear Stearns was rescued, that became the first time an investment bank had been rescued by the federal government. They let Lehman fail, but basically it was a huge bailout, as we all know. Now we've upped the FDIC insurance, in effect, to an unlimited amount of money. And so who's really the bank here? Sounds like the government is our bank at the moment.
As William writes, it turns out to be an elaborate and highly sophisticated house of cards. William, we appreciate your insight.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.